Ladies and gentlemen, welcome back to the channel, and I don't even want to sugarcoat it for you. I'm just gonna tell you, this is the biggest week for Tesla stock in years. If you're not jacked up like I am, well, that's a problem. And the other problem is the Tesla tequila is in here because I was gonna take a shot with you guys on June 13th when the comp plan goes through. Yeah, I'm optimistic. There's a possibility it doesn't. And here in this video, we're going to go over a couple different things. Number one, where I believe Tesla stock is going by the end of this week. Keep in mind, June 13th is on a Thursday. So we're really only going to have like June 13th and then Friday, and then the week's over. So a lot of the move could happen actually next week as well. But beyond that, we're going to have the Fed and a new summary of economic projections. We're also going to have CPI on the same day as the Fed, just to make things even more complicated. We have PPI as well. You have some earnings coming out and an Nvidia stock split, in which Nvidia has accounted for about half of the move in the S&P 500 and is up over $500 per share just since mid-April. So if you get a sell-off there, that could be problematic for markets. We're going to go over all of this in the shortest amount of time possible. Let's just be honest. Your time is your money. It's valuable. So let's get this thing done. Hit the like button and subscribe to the channel, and let's go ahead and get started. So first and foremost, let's start with the easy part. First off, you have some earnings this week. Not a lot of earnings, but some important earnings. Tuesday and after hours, you have Oracle. Yes, that can be important. You have Broadcom Wednesday and after hours. Not as talked about, but Broadcom has done exceptionally well. It's a high-flying AI stock, semiconductor company. If they give you good or bad earnings, that can obviously be important for the entire sector, considering Nvidia is going to start trading coming tomorrow morning after the split. Yeah, it's going to be even more important what happens on Wednesday. Now, the Fed's on Wednesday, CPI is on Wednesday, so other things are going to happen on that day as well. And then you have Adobe, which is seen as kind of an AI adjacent trade. There's kind of some fear there right now, a couple different things going on. But these three earnings will be important for their own respective sectors. Now, as far as the economic calendar for this week, tomorrow you have nothing. Tuesday, you don't have much either. Inflation rate out of China, big whoop. Half the data's cooked anyways. That comes out at 9:30 p.m. Wednesday is really your first big day for economic data and for the Fed. So at 8:30 in the morning, you're going to have inflation that comes out. Now, core month over month, that's the one people are paying attention to. You're expecting a 0.3% number. Last month was also 0.3%, but it doesn't come out as a round number, right? It doesn't come out at 0.2 or 0.3% all too often. It comes out at like 0.22 and gets round down to 0.2, or it comes out at 0.34 and gets rounded down to 3, or 0.35 and gets rounded up, right? There's the rounding effect there. So you can have a high 0.3%, you can have a 0.34 and it gets rounded down to 3, and that's not great. You can have a low 0.3 and it comes in at, let's say, 0.25 or 0.26 and gets rounded up to 3, and that's going to be a little bit better. Now, we're going to see what your major banks think about the, inflation rate, what the number is actually going to be as per their estimates coming tomorrow, and I will share that with you once those estimates are actually published to get a better idea of what decimal point Wall Street is looking for. Your year-over-year core rate is expected around 3.5%. Last month, it was 3.6%. Headline month-over-month expected about 0.1%. A lot of that, most of that's due to the decline in oil prices that you have seen in the last month. Probably not going to be important, but a 0.1% number on headline would definitely be encouraging to markets nonetheless, even if it doesn't matter all too much. The year-over-year inflation rate is expected to stay unchanged at 3.4%. Now, I think some of, the positives, if you will, for CPI and Wednesday is you're expecting the same number as last month. There's a good chance you come in at a low 0.3, like a 0.26, and that could be seen as really good. Now, it's going to be a little bit harder to come in at 0.2. Maybe a high 0.2 could make sense, like a 0.24, and gets rounded down to 0.2. That would also be exceptionally good news for the markets and for the Fed, in which we're going to have the Fed later in the day on Wednesday. That will be at 2 p.m. You'll get the initial statement that will come out. Now, you will get a summary of economic projections, and that is going to be massively important. The last summary of economic projections that we got was on March 20th, 2024, and this is what it looks like. It's the dot plot, where Fed members go plot what they think all these different categories of the economy and inflation are going to be. So what's really important to watch is the federal funds rate projection, as well as the GDP and the unemployment projection. PC inflation, that can move, but really it's all about how many cuts does the Fed think they're going to do this year, next year, and what is GDP going to look like, right? So, and I should say the last summary of economic projections, this one, you actually had the longer run rate go up from 2.5% in the December summary of economic projections to 2.6%. It didn't get much talk. Investors didn't care too much, but that was the first rise we have seen in a very long time for the estimated longer run federal funds rate. So what happened the last summary of economic projections is the Fed was projecting 3 rate cuts this year. Barely, okay? Consensus really was 2 cuts for 2024. So as long as we stay at 2 cuts, that's going to be great. If they lower that to 1 cut, that could be quite problematic. If we stay at 3 cuts, I think that can be good as long as the Fed makes it clear and the data makes it clear earlier in the day on Wednesday that inflation's the reason why we're going to expect 3 cuts, right? If it's because of economic instability or problems out there in the labor market or in the overall economy, that's not going to be seen as good news. So preferably we want to see 2 cuts at least, if not 3, but only 3 if inflation comes in good on Wednesday and the Fed's expecting it will continue to decline, right? Now, worth mentioning, you have also had the Bank of Canada that cut rates first, and then the ECB, the European Central Bank, that also cut rates last week. So the Fed likes to move with other major central banks and vice versa. So when they cut rates, it's a good chance we're going to cut rates pretty shortly thereafter as well. And I think this Wednesday will just be important because, it's the last press conference. It's the last chance that Powell will really be able to set market expectations for whether or not we're going to get a cut coming July 31st, or if that's even a possibility, right? And of course, Powell's going to speak before June 31st, and other Fed officials will as well. And they're going to say they want to remain, data dependent, but we're going to get a pretty good idea of if the Fed will be willing to cut July 31st or not. So that'll be important. Now, the last summary of economic projections, the Fed estimated 2.1% GDP for this year, 4% for the unemployment rate, which we are there right now. So if they expect that to continue to go up, maybe that could be a little, problematic. And the last summary of economic projections back in December, the Fed was expecting an unemployment rate at 4.1%. So you're already at 4%. If it goes higher, that's higher than the Fed's forecast. So definitely want to watch that a little bit more, because if the Fed raises that to, let's say, 4.2%, then that could have economic, consequences, right? PC inflation remained the same for the end of 2024 in the last SEP at 2.4%. Core PCE was revised up from 2.4 to 2.6%. So want to watch those as well. You also want to watch the range of what Fed officials were expecting, right? So in December, a summary of economic projections, on the low side, the lowest dot expected rates to be 3.9% by the end of 2024. Right? The highest dot expected no change at all, no cuts at 5.4%. But what happened coming by March is even the most bullish or dovish Fed official changed their estimate from 3.9% to 4.4%. And that's how you barely came in at 3 expected cuts. It was really like 2 expected cuts. So we really want to see where that, most dovish Fed official is at, because if they raise that, that's going to be, even more problematic. And if I do understand correctly, the dot plot is actually done over the 2-day meeting. So that'll be, Monday, Tuesday and Wednesday. So I'm not sure. I don't believe the Fed will be able to react or change their dot plot after Wednesday's CPI. Now, I could be wrong. We'll get a little bit more clarity on that. And if they are able to change their dots following the CPI, which probably, because they've had a heads up, we're going to get CPI now. And the Fed already knows what CPI is going to be like coming tomorrow. Maybe Jerome Powell knows what it's going to be today. So maybe, yeah, it's probably already going to be factored into the summary of economic projections. I think that's a pretty fair bet. But yeah, this is going to be the biggest thing from the Fed in general for, months. This will really have a huge impact on markets. And then at 2:30, like normal, Jerome Powell will get out there and do his press conference. And there will be a lot of questions asked about each of these segments of the summary of economic projections, or the dot plot. Now, beyond that, on Thursday, you are going to get PPI month over month expecting 0.2% and core PPI month over month expecting 0.3%. That's a lot better than the 0.5% numbers that you had last month. And PPI is producer price index, or producer price inflation is a better way to think about it. CPI is consumer price index, or consumer price inflation. So PPI can be important, but I think by Thursday, markets are going to be reacting to the Fed and the dot plot, and PPI may just be something on the back burner, more or less. You do have the Bank of Japan interest rate decision. They have raised rates for the first time in a long time. That was back around April of 2024. They're not expected to do anything with their policy coming Thursday, but we'll see. They have a tendency of surprising people. And then on Friday, we will get the Michigan Consumer Sentiment Survey, expecting sentiment will actually go up again. 5-year inflation expectations are important to watch, expecting 3% there, and 1-year inflation expectations are expected to stay at 3.3% as well. Current conditions are expected to rise a little bit from 69.6 to 70, and Michigan consumer expectations are expected to rise a lot from 68.8 to 75. And one of the biggest catalysts of all for next week will be Nvidia. Nvidia will start trading after the split, and a lot of people that trade these stock splits, they tend to get out after the split itself. Unless they're trying to be a long-term investor, it's typically one of those, buy the rumor, sell the news event. Now, Nvidia has accounted for about half of the gain you have seen so far in the S&P 500 this year alone. So if Nvidia does get a sell down and, some block orders start to come in and sell the stock, then that will be problematic for the broader markets. And Nvidia is at 75 on the RSI. So I think it's probably likely Nvidia does sell down, at least to some degree. And after all, you've rallied what? Oh my gosh, like $500+ per share ever since that low back on April 19th for Nvidia. So you rallied into earnings, you rallied after earnings. 95% of that rally after earnings, I believe, was the stock split, and there's a lot of traders that got in. So don't be surprised coming tomorrow if Nvidia is down 3 to 5%. So that could make for a rough start to the trading week, but I think that will fade. Heading into Wednesday, it's all going to be about CPI and the Fed, as well as that summary of economic projections. Now, when it comes down to Tesla stock and June 13th, I've talked about this many times, but here's kind of the short version. Tesla stock was a $265 stock when you started 2024. The business looked like it was going to continue to get worse. Margins were going to fall. Deliveries were not really going to pick up in any kind of meaningful way. Things just looked bad by the end of January, start of February. But what ultimately happened was Judge Kathleen McCormick shot down Elon Musk's comp package, and that put a lot of doubt whether or not Elon was going to stay at Tesla, or Tesla's talent was going to stay, or AI was going to stay at Tesla. And that has been the single biggest negative driving factor of Tesla stock, just to put a kind of price parity to what has happened with Tesla. Tesla today is a $177 stock. Now, if Elon Musk's comp package is reinstated, the fears that Elon would leave Tesla are gone. AI stays at Tesla, talent stays at Tesla. At the same time, it looks like, per Google Trends data, Tesla's delivery should actually accelerate in Q2. The last quarter conference call was magnitudes better than anything we've had over the past year. And we got a lot of clarity from Elon Musk and the Tesla team, what's coming next, profitable growth and, keeping the balance sheet good, all kinds of different things. I'm going to assume you kind of know what last quarter earnings call was like and how positive it was. Now, beyond that, you have seen a lot of hedge funds and institutions go out and hedge their portfolios for this event, because if it does not go through on June 13th, if Elon's comp package is shut down, then you're probably looking at 20-30+% downside for Tesla stock over the next couple of weeks. Good news is it's not expected that will happen. And if you watch the last video, it looks like 90% of retail shareholders are voting for Elon's comp package to reinstate Elon's comp package. So that is, definitely encouraging news as well. And really, if you're a hedge fund institution, money manager, and you own Tesla stock, you want the vote to go through, because if I can sit here and say the stock's going to fall 20-30%, then I think all big money understands that as well. So if the vote goes through, then you're looking at, 80 to 100 million shares getting bought back pretty much instantaneously from market makers, as per all of those in the money puts, those hedges big money has been putting on. The back end of that is market makers shorting stock. So they're going to have to buy back a ton. And you have 105 million registered shares that are sold short. That could lead to one hell of a short squeeze for Tesla stock. And I think overall, fundamentally, that would be fantastic news for Tesla stock investors. So that is kind of the long story short. Either huge downside or huge upside following June 13th. The odds are in our favor that is going to be an upside move. But if you are concerned about that potential downside, you probably want to go out and put a hedge on your portfolio. I don't think you can go wrong right now by doing that, considering all of the extreme volatility that we are expecting. And as I have said before, I am expecting a 15 to 20% rally if the vote does go through. That could put Tesla stock by the end of this week. And keep in mind that shareholder meeting is on the 13th, and then you're going to have Friday as well for the stock to trade. So I think a lot of the move could actually come next week as well. But a 15% move higher for Tesla stock would put the stock in the ballpark of about $205 per share. A 20% move higher, which I think is probably a little bit more likely given how much hedging we have seen, how many shares would need to be bought back pretty much instantaneously. You could see Tesla stock around the 210 to 214 range coming by Friday. And I don't think a lot of people realize just how explosive that upside move is likely to be. Now, if I'm wrong, I'm wrong. I'm not a financial advisor. This is not financial advice. And make your own decisions ultimately. But that's just my personal opinion. Now, I do believe you could see a 10 to 12% downside move on Friday as well. If the vote does not go through, a 10% down move would put the stock back to about 260, which in the grand scope of things, we were just there not too long ago. Big deal. 15% move lower would put the stock at about 151, and that's getting back to, even a lower level. Now, we were, way lower than that at one point, right? So not a big deal in the grand scope of things, but that is quite the downside. And I do think Tesla stock could ultimately drop at least 30% if the vote does not go through over the next coming weeks. And obviously Tesla is going to try to remedy that in some way they can, but that would put the stock a 30% drop from here back to about 123. Now, to the contrary, I think Tesla stock could easily get back to that 265 level within even the month of June. That would be my expectation, but potentially even run a lot higher than that by September. It wouldn't surprise me if Tesla's $300+ stock just to get to $300 from here. That is a gain of about 68%. And let's say Tesla could be a $320 stock by September 1st. That would be about a 79% rally. And I do believe this shareholder vote is the key to that. Right? Things are looking better for Tesla. Things are getting better for Tesla, but you got to keep Elon as the CEO. You have to get that uncertainty out of the way. And again, if you want to put fundamentals to this, markets are forward looking. So if you start to look at, 2025 EPS, especially as we get through, June and then July and August, September, markets are going to start looking at 2025 EPS that could easily come in at, let's say, $4.75 or more. Tesla, it was trading at about a 65 times multiple back here when the stock was about $265 per share to start 2024. That would, on paper, put the stock at about $309 per share, let alone if we could get a $5 EPS projection for 2025 and times that 65 multiple, that would put the stock around $325. So there's actually numbers to back up what I'm saying here, but I think it's going to be a surprise. I think we are going to be surprised throughout this week when it comes to CPI earnings, the Fed, Tesla's, meeting, Nvidia split. It's going to be one hell of a crazy week. So hit the like button, subscribe to the channel. Let me know what you think about this information down below in the comment section. If you guys want to come join the trading community, check out that link down below in the description of this video. Come watch me put my money where my mouth is. Enjoy the rest of your day, and I will see you in the next one. And remember, none of this is financial advice, and Tesla stock could do absolutely nothing coming June 13th. That's always a possibility as well.